Welcome back to G2's weekly market update, where we break down the key market and economic developments across the US, Europe, Japan, and China to keep you informed in just a few minutes. This week, markets were supported by strong corporate earnings, resilient labor data in the US, improving activity in Europe, record highs in Japan, and steady domestic demand signals from China, despite ongoing global trade discussions. United States. The US equities rallied on the back of a strong earnings season. Nearly 85% of companies in the S&P 500 beat estimates with an aggregate earnings surprise of about 19%. Technology stocks led gains supported by optimism around AI infrastructure demand, while energy and utilities lagged. Labor market data showed resilience. Initial jobless claims came in below expectations at 2 lakhs, while continuing claims fell to their lowest level since 2024. April non-farm payrolls rose by 1,15,000, well above expectations, and March figures were revised higher. The unemployment rate held steady at 4.3%, though participation slipped to a multi year low. Construction spending and factory orders surprised to the upside, driven by strength in housing and demand for electronic goods linked to AI expansion. However, consumer sentiment weakened sharply. The University of Michigan Sentiment Index fell to a record low, reflecting concerns around gasoline prices and tariffs. Europe. The Stocks Europe 600 ended the week modestly higher amid easing geopolitical tensions and solid earnings. Though late week tariff rhetoric from US President Donald Trump pressured sentiment. Germany's DAX and Italy's FTSE MIB posted gains while the UK's FTSE 100 declined. Inflation pressures resurfaced as Eurozone producer prices recorded the largest monthly rise in over 4 years, driven by energy costs. German factory orders surged well above expectations, although construction activity weakened. Meanwhile, UK PMI data signaled improving business activity. Comments from Bundesbank President Nagel indicated that the European Central Bank may consider another rate hike in June if inflation risks persist. Japan. In a holiday shortened week, Japan's Nikkei 225 surged to a record high, led by technology and semiconductor stocks on continued AI optimism. The broader topics also advanced. Bond yields eased slightly, and the yen remained volatile amid speculation of potential currency intervention. Falling oil prices helped ease energy cost concerns for the import dependent economy. Real wages rose for the third consecutive month, signaling a more sustainable wage price cycle and supporting the case for gradual policy normalization by the Bank of Japan. China. Chinese markets advanced after reopening from the May Day holiday. The CSI 300, Shanghai Composite, and Hong Kong's Hang Seng Index all posted gains led by technology and consumer shares. Services PMI data indicated resilient domestic demand even as export orders softened. Holiday travel data showed rising trip volumes but slightly lower spending per trip, highlighting cautious consumer behavior. Markets were also supported by expectations of near term trade stability ahead of planned talks between President Trump and President Xi, with discussions focused on agriculture, AI safeguards, and supply chain resilience. G2 takeaway. This week highlighted a clear theme across markets. Earnings strength and AI driven investment are supporting equities. Even as consumer confidence weakens, inflation pressures re emerge in Europe and global trade rhetoric remain in focus. Labor resilience in the US, improving activity in Europe, structural wage improvement in Japan, and stable domestic demand in China are providing a supportive macro backdrop for now. Thank you for watching G2 Weekly Market Update. Stay tuned for next week's insights as we continue to track the trends shaping global markets. Thank you.